Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, November 5th, 2024. I think it's election day. Haven't heard, or I heard something in the news about that. I could be wrong. But, anyways, yeah, the silly season is, well, hopefully it ends tonight or maybe by tomorrow morning. But with the people in charge, no telling what's going to happen. Could we be in civil strife within a few weeks? Or are we just going to continue the same technocracy that we've been living under for the last few decades? So anyways, all right. Well, before we get into the markets, they appear to be fairly happy today. If you could, yes, yes, I see you there, John. Could you give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell? All righty. Let's jump into the markets. Come on. My screen's not working. Alrighty, Dow Jones was up 1.02%, 427 points, closed at 42,221. S&P 500 up 1.23%, 70 points, closed at 5783. Nasdaq up 1.42%, 258 points, closed at 18,438. The VIX was down 6.64% today. It's at 2052. Canada up 0.54, Brazil up 0.06, and Mexico down 0.09. Maybe they're upset about our elections. In Europe, Germany was up 0.55%, the UK down 0.14%, France up 0.48%, the Netherlands up 0.37%, Spain up 0.29%, Italy down 0.2%, Switzerland down 0.25%, and Portugal down 0.55%. In Russia, it looks like both exchanges were in the green. The MOEX up 0.92%, the RTSI up 0.4%. And the Asian markets, the Nikkei in Japan was up 1.42%, Australia down 0.4%, New Zealand up 0.47%. In China, the Shanghai was up 2.32%, Shenzhen Component up 3.22%, China A50 up 1.85%, DJ Shanghai up 2.53%, Hang Seng up 2.14%, and the Taiwan weighted when it closed on the 4th was up 0.81%. All right, so those are our markets. Pretty exciting stuff, I know. I mean, we're curious to see what happens after today, but we'll take what we can get. All right, let's hop into the market recap. U.S. stocks rally as election voting gets underway. Actually, I voted on Sunday. Let's see here. U.S. stocks surged on Tuesday as voting began in a tightly contested presidential election between Donald J. Trump and Kamala Harris. I don't think it's that close personally. I mean, unless certain sides have some chicanery, but that's just my opinion. Polls showed that candidates neck and neck with outcomes likely to shape trade, tax, and economic policies over the next 4 years. Trump's policies are expected to focus on inflationary spending and stricter tariffs on China, which could negatively impact the tech sector. In contrast, Harris's platform includes higher taxes for higher earners, those of us who actually pay taxes, and large corporations while easing taxes for families. Yeah, that's a load of crap. Because if you raise taxes on everything that the average middle class family spends money on, it makes their costs go up. And anyways, the Federal Reserve's upcoming meeting on Thursday added to investor caution with a widely anticipated 25 basis point rate cut following September's 50 basis point reduction. While the Fed has shown a data-driven approach, with recent strong economic data casting some doubt on further cuts, the weak non-farm payrolls report on Friday suggests the labor market may be cooling, keeping a bias towards easing. Investors await Chair Jerome Powell's address for guidance on the Fed's rate path. In earnings news, Palantir Technologies led the day, rallying over 22% after reporting strong Q3 results with U.S. consumer growth surpassing expectations. Restaurant brands fell 1% due to weak revenue from Tim Hortons and Burger King, while Astera Labs soared over 30% after beating forecasts. Other notable movements included a 14% rise in Trump media and technology as investors appeared optimistic about Trump's electoral chances, and a 1% dip for Boeing after machinists agreed to end the strike. Dollar Tree also slid after CEO Rick Dreeling's resignation, and crypto stocks rose as Bitcoin climbed past $70,000. All right, good stuff. All right, let's hop into some data. This comes to us via First Trust, September International Trade, and this was put together by Mr. Strider Elas. All right, the U.S. trade deficit in goods and services expanded to $84.4 billion in September, the highest in over 2 years, driven by declining exports and a surge in imports. However, the overall trade volume, combining imports and exports, rose by $7.1 billion, reflecting increased cross-border business and consumer activity. Trade volume is up 5.9% from last year, with exports increasing by 2.4% and imports by 8.8%. This surge in imports is partly attributed to businesses stocking up ahead of a potential dock worker strike on the East and Gulf Coasts, which, although brief, prompted companies to ensure supply security. As a result, import growth may slow in the coming months. Well, all they did, as far as I'm aware, is postpone, or they came to kind of a agreement, and I'll put that in quotes, and agreed to wait until I think mid or late January to actually finalize any deals. So depending upon who's going to be the president and the next administration, this could, fall apart. I don't know. I mean, I imagine they'll probably come to some sort of terms, but, I would say, it's not completely out of the woods yet. All right, jumping back in, a significant shift in U.S. trade patterns continues, with imports from China increasing at only 2% this year versus 2023, and down 22.9% from 22 levels. Mexico has now overtaken China as the top exporter to the U.S., with Canada close behind. Additionally, global supply chain pressures have eased significantly, with the New York Fed's Global Supply Chain Pressure Index now only slightly above historical averages, a vast improvement from 3 years ago. The U.S. has also marked 28 consecutive months as a net exporter of petroleum products, as petroleum exports exceeded imports. In other economic news, vehicle sales in October reached an annual rate of 16 million units, up 1.7% from September and 4.5% year over year. All right, so trade seems to be okay. We're still importing a lot more than we are exporting, which creates the massive deficit that we have. But it's been that way basically my entire life. So, and I'm 50. So the world hasn't fallen apart because of our deficit there. And now the deficit in government spending and the massive debt, that's a real issue. All right, next up, some more data from First Trust, October ISM Non-Manufacturing Index. This was put together by Nate Gurzy. All right. In October, the U.S. service sector activity increased sharply, with the ISM Services Index reaching 56, marking its fastest pace in over 2 years. 14 of the 18 major service industries reported growth, while only two saw declines. The uptick in overall index was largely driven by higher employment and supplier deliveries, each rising by over 4 percentage points. Delays from hurricanes and port strikes contributed to longer lead times, boosting the supplier delivery index. Employment in the sector hit a one-year low at 53, though gains were uneven, with half of the industry showing growth in employment while 5 reported declines. Despite this growth, business activity and new orders saw slight declines, though both remained in expansionary territory, signaling continued economic strength in the services sector. Inflation remains a key issue, with the prices paid index hitting a 58.1, the highest in the report, as 15 out of 18 industries faced increased costs. While the Federal Reserve has tightened monetary policy, cutting the M2 money supply by 2.3% from its peak in early 2022, recent rate cuts have eased this somewhat. A further 25 basis point cut is expected at the upcoming Fed meeting this week, though there is concern that continued easing could reignite inflation, particularly as price pressures persist in the services sector. Yeah, a lot of people seem to think that, inflation is kind of like, if you've been out camping and, you put sand over your coals, or they eventually, you think they burnt out, and then a good stiff wind comes by and, it flames back up. So, that's the worry with easing with the Fed, where they stopped rate increases last year in, I guess it was like July, August, somewhere, and it just left the rates where they were for a full 12 months, and then dropped rates 0.5% at the September mid-month meeting. So, I personally, if it was me, if I was sitting in Chairman Powell's seat and was making these decisions or influencing the Board of Governors, on how they vote, I'd say, hey, we have, inflation still warm. Let's continue to ratchet rates up until, consumer spending starts to wobble a little bit. Maybe unemployment really starts to climb. Then we've reached our neutral rate. Maybe we pull back a quarter or 0.5% from there and see what happens. But no, they waited, for a year and finally caved I guess a month and a half ago to drop the rates 50 basis points. Again, if the economy's good, which I'm hearing from the TV and the people out of Washington all the time, why do we got lower rates? So anyways, all right, one last article here from Zero Hedge, how markets reacted to each U.S. election since 2000. So let's dive into this and see what happened. All right, as the U.S. presidential election nears its conclusion, Deutsche Bank has analyzed how markets reacted to the last 6 elections since 2000. Wow, it's been 6 elections. I remember that 2000 election. I was in one of those counties in Florida with the hanging chads. I wonder if my vote was one of those where they were holding it up and looking at it. I didn't pay attention to it. I just, punch, and dropped it in the box and didn't really think much about it at the time until a few days later when they started making a fuss about it. All right. Historically, reactions have varied depending upon on political outcomes, prevailing economic conditions, and concurrent major events. In the 2020 election, despite initial uncertainty, markets rallied after Biden's projected win, supported by the prospect of a divided government, which was perceived to limit regulatory and tax changes. Yeah, well, didn't help with the inflation. A further boost came with positive COVID-19 vaccine news, strengthening the economic outlook. And yeah, that vaccine worked really good. All those people did not get COVID after getting the shot. All right, 2016 election. Trump's unexpected win led to a sharp rise in Treasury yields driven by expectations of fiscal stimulus and tax cuts under unified Republican control. The 10-year Treasury yield spiked from 1.85% on election night to 2.44% by year end. 2012, though Obama's reelection was anticipated, markets reacted negatively post-election due to concerns over the fiscal cliff and European sovereign debt issues. Divided government persisted, fueling fears over potential policy gridlock. 2008, Obama's win was widely expected, but the market response was overwhelmed by the ongoing global financial crisis. The S&P 500 fell over 5% on the days following the election as bleak economic data emerged. 2004, Bush's reelection spurred a rally as markets anticipated policy continuity and stable tax rates. The S&P 500 rose on post-election optimism and strong economic data. And 2000, this closely contested race saw extended legal battles culminating in a Supreme Court decision. The resulting month-long uncertainty triggered the S&P's worst monthly loss of the year, with investors flocking to Treasury bonds for safety. These election reactions highlight the market moves are often shaped by broader factors beyond the election itself, such as economic data, crises, and the Federal Reserve's policy. Yeah, I'd say the Federal Reserve has more of an influence on the economy than, granted, the way I look at it is, people in government, they really don't help business, be successful. The best thing they can do is stay out of the way and allow businesses to just run their businesses the way they want. As long as they're not stealing from people or hurting anybody, who cares? We don't need all these stupid rules and regulations and all the dumb stuff that we do, telling other people how to live their lives and run their companies and such. So again, you get hired on by a company and those are the rules of the road. So you just have to live with it. If they want you to wear, pink shirts every day, that's just the terms of employment. So anyways, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So feel free to give me a buzz. I'd be happy to help get you back on track or get you on the track to start with. So, all right. Well, hope everyone has a great night. I'm sure people will be watching the election. Mr. Trump's on my TV as we speak. Looks like it's probably from last night. So I'll probably be up late watching the results, and I'll have to get a little sleep. I have some meetings tomorrow after early afternoon, so we'll see. All right. Have a great night and talk to you later. Adios.